You've located the deal, you've investigated it, you've done your due diligence. Now comes the moment that separates dreamers from owners, the close. Today, we're covering phase 3, closing a deal. I'm going to walk you through exactly how to execute, what the paperwork looks like, how to fund the investment, what questions to ask, and how to avoid the mistakes that trip up first-time investors. Because here's the truth. All the research in the world means nothing if you never pull the trigger. And today, you're learning how to do it right. This is where time freedom, financial freedom, and stress freedom become real. Before we dive into the execution, let me remind you why this moment matters. I'm Ramel Lee. I spent more than 22 years with the New York State Metropolitan Transportation Authority, Bridges and Tunnels, rising from officer to deputy chief. I served in multiple commands, led complex operations, and made critical decisions under pressure. But the most important decision I ever made wasn't on the job. It was deciding to become an investor while still wearing the uniform. In 2016, I founded RDL Security Solutions with confidence, the same way I've done it for over 2 decades. In 2020, I graduated from the Goldman Sachs 10,000 Small Businesses program, which completely transformed how I thought about capital, ownership, and scale. Over the past 20 plus years, as an entrepreneur and investor, I've sifted through hundreds of deals. I've built 3 7-figure companies. I founded RD Lee Capital Partners, which at its height managed approximately $20 million in assets under management. But more importantly, I've been able to live life on my terms. Since 2012, I haven't missed a single birthday, holiday, or graduation. I've sent my children to the best schools while staying present and engaged. I've built time freedom, financial freedom, and stress freedom, not by working harder, but by closing deals that work for me. I also founded the Unlimited Pension Collective, a growing community of law enforcement professionals committed to financial education, collective economics, and ownership. Our mission is to help officers reduce reliance on overtime, supplement pension income, and reclaim control over their financial future. Today, I'm going to teach you how to close deals. Let's quickly recap where we've been. Phase 1, locating a deal, finding opportunities. Episode 6. Phase 2, investigating a deal, due diligence and analysis. Episode 7. Phase 3, closing a deal, execution and ownership. Today's focus. You've done the work. You found the opportunity. You verified the numbers. Now it's time to execute. This is the moment where you transition from employee mindset to owner mindset, from paycheck to portfolio, from overtime dependency to asset ownership. Let's get into it. Here's where most officers get stuck. They investigate forever, but never close. They found 10 deals. They've analyzed everyone. They've talked to operators, reviewed financials, and stress tested the numbers. But they never pull the trigger. Why? Because they're waiting for certainty. They're waiting for the perfect deal. They're waiting to feel completely ready. But here's the truth. You'll never feel completely ready. There will always be more you could research. There will always be unknowns. There will always be risk. The difference between officers who build wealth and officers who just talk about it is this. They make the decision to become owners. They understand that good deals with acceptable risk are worth executing. They understand that action creates clarity. They understand that ownership, not analysis, is what builds time freedom, financial freedom, and stress freedom. Today, you're learning how to shift from analyst to owner. Let me walk you through the closing process step by step. This applies whether you're buying real estate, investing in a syndication, joining a private equity deal, or purchasing a business. Step 1, review and sign the legal documents. Every investment has paperwork. Don't skip this step. For real estate, purchase agreement or contract, title search and title insurance, inspection reports, loan documents if financing. For syndications, private placement memorandum or PPM operating agreement or LLC agreement, subscription agreement, investor questionnaire, accredited versus non-accredited. For private equity or businesses, shareholder agreement, purchase agreement, financial statements and audits, non-disclosure agreements, NDAs. Here's what I do. I read every document. If I don't understand something, I ask. If it's complex, I hire a lawyer. Yes, that costs money, but it's cheap insurance compared to losing your investment because you didn't understand what you signed. Never sign something just because the operator says it's standard. Standard for who? Read it, understand it, ask questions, know exactly how much you're investing and how it's structured. Questions to confirm. What's the minimum investment? Some syndications require 25K, 50K, 100K minimums. What's the ownership structure? Equity, debt, preferred equity, common equity. What's the capital stack? Who gets paid first if things go south? Are there fees? Acquisition fees, management fees, performance fees? What's the distribution schedule? Monthly, quarterly, annual. I always confirm this in writing before I wire funds. I want to know exactly what I'm buying and where I sit in the capital structure. Example, I invested in a hotel syndication where I was a limited partner with preferred equity. That meant I got paid before common equity holders, which gave me downside protection. That structure mattered, and I made sure I understood it before closing. Now it's time to move the money. Here's how that works. For real estate purchases, wire transfer to escrow or title company, certified check for closing costs, down payment plus closing costs, typically 20% down if the financing. For syndications, wire transfer to the syndication's LLC operating account, ACH transfer for some platforms. Check, rarely used but possible. For private equity, capital call process, you commit funds, then they're called when needed, wire transfer to the fund or operating entity. Here's my rule. I never wire money until I've verified the account details independently. I call the title company, the operator, or the fund manager directly, not just reply to an email. To confirm the wiring instructions, wire fraud is real and it's irreversible. After you've funded the deal, you need proof of ownership. What to expect. For real estate, recorded deed showing you as owner. For syndications, member certificate or K1 partnership interest. For businesses, stock certificate or operating agreement showing your ownership percentage. For funds, confirmation of investment and account statement. Keep everything organized. I have a digital folder for every investment I've ever made. Contracts, confirmations, tax documents, correspondence. If something goes wrong or if I need to reference it later, I have everything in one place. Ownership isn't just emotional, it's documented. Make sure you have the proof. Closing isn't the end, it's the beginning. Now you're an owner. Here's what happens next. For real estate, property management begins if it's a rental. You receive monthly or quarterly reports. You monitor occupancy, expenses, and cash flow. For syndications, quarterly investor updates from the operator, annual K1 tax documents, distribution payments, monthly, quarterly, or at exit. For businesses, board meetings or partner calls, financial statements and performance updates, strategic decisions on growth or exit. As an owner, you're not passive, you're informed. You monitor performance, you ask questions, you hold operators accountable. This is how you protect your capital and ensure your investment delivers the time freedom, financial freedom, and stress freedom you're building toward. Those are your 5 steps. Review documents, confirm structure, fund the investment, confirm ownership, understand post-closing. Follow this process every time, and you'll close deals with confidence and clarity. Let's talk about the mistakes that can derail your first deal or cost you money. Mistake number 1, rushing the paperwork. Don't sign documents just to get it done. Read everything. If you're unclear, ask. If it's complex, hire a lawyer. Mistake number 2, not verifying wiring instructions. Wire fraud is real. Always call to verify account details before sending money. Don't rely on email alone. Mistake number 3, investing money you can't afford to lose. Never invest your emergency fund, money you need in the next 12 months, or funds you can't afford to lose. Only invest capital you can lock up for the investment timeline. Mistake number 4, ignoring the fine print on fees. Some deals have hidden fees, acquisition fees, asset management fees, disposition fees. Know what you're paying and whether it's reasonable. Mistake number 5, not asking questions. If you don't understand something, ask. Good operators expect questions, bad operators avoid them. Your job is to understand what you're buying. Avoid these mistakes, and you'll close your first deal cleanly and confidently. So you've closed the deal. Now what? Now you're an owner. And that means your relationship with money, time, and freedom just changed. You're no longer just trading hours for dollars. You're building assets that generate income, whether you're on duty, off duty, on vacation, or retired. You're no longer dependent solely on overtime and your pension. You've supplemented your income with ownership. You're no longer controlled by your department's staffing needs. You've taken a step toward time freedom, financial freedom, and stress freedom. And here's the best part. The first deal is the hardest. Once you've done it once, you'll have the confidence and the framework to do it again and again and again. That's how you build a portfolio. That's how you build wealth. That's how you build a life beyond the badge. Here's your homework this week. If you've been investigating a deal, take the next step. Schedule the closing, review the documents, and commit to execution. If you haven't started yet, go back to episode 6 and begin locating your first deal. Take the investor type quiz located in the description to discover what kind of investor you are: hands-on builder, hands-off investor, or hybrid. Knowing your type will help you choose the right deals and the right strategy. This is the moment. You've learned how to locate deals. You've learned how to investigate them. Now you've learned how to close them. The only thing standing between you and ownership is the decision to act. Don't wait for perfect. Don't wait for certainty. Don't wait until you feel ready. Take the step. Close the deal. Become an owner. Because time freedom, financial freedom, and stress freedom don't come from planning. They come from execution. We've come a long way together over these past 8 episodes. We started with why your pension alone isn't enough. We talked about escaping the overtime trap. We discussed making your money work for you, choosing the right investment path, and building your team. Then we got tactical: how to locate deals, how to investigate them, and today, how to close them. You now have the complete framework to go from cop to capital, to go from paycheck dependency to asset ownership, to build time freedom, financial freedom, and stress freedom on your terms. But knowledge without action is just entertainment. The real work begins when you take what you've learned and apply it. So here's my challenge to you. Close your first deal in the next 90 days. Not someday. Not when you're ready. In the next 90 days. Find it, investigate it, close it. And when you do, share your story. Tag me on LinkedIn. Join the Unlimited Pension Collective and connect with other officers who are on the same journey. Because building wealth isn't a solo mission, it's a collective one. Thanks for tuning in to the Bankroll Call. If this series helped you see what's possible beyond overtime and pensions, hit subscribe, comment, and share this with every officer who needs to hear it. You can connect with me and the Unlimited Pension Collective. Take the investor type quiz. The link is in the description below. And let's keep building together. I'm Ramel Lee, and remember, your badge earned you respect. Your investments will earn you freedom. Stay safe out there and start closing.